Welcome. This is Options Trading Tutorials. My name is Mark Williams and I'll be your host for tonight. What I'm doing right now is a week in review from the short week of the 22nd to the 25th of January 2008. Man, was it a week. I'll tell you what. Right now what we're doing is we're taking a look at the Dow Jones Industrial Average weekly chart. Okay, and what I'm doing is just going to explain what's going on with the market and why it's very important. Okay, so 2006 we had a slightly sideways action, retracement, and stock market went to the races. 2007 we went through and I remember this week. That was the week the Chinese said we don't trust American markets, and they dropped a lot of shares of our stock. When that day happened, let me open my eyes to a lot of things that are going to be going on with this country real soon. Anyway, market continued to go up. Nice sideways action, lots of uncertainties in the market, recession fears, recession woes, then pew to last week. Last week is pretty important because on Martin Luther King Day, while our market was closed, all of the markets around the world were open, and they were just dropping like hotcakes. I mean, you wouldn't believe it. The Mumbai Stock Exchange stopped trading, the Nikkei dropped, the FTSE dropped, the Canadian stocks dropped. It was just mass pandemonium because people were like, oh my god, the American economy is sucking wind. And then here come our knight in shining armor, the Federal Reserve. The Tuesday morning, when the market opened, they lowered the discount rate 0.75 points. Now, a lot of people are like, what's that mean? What does that mean? Well, long story short, they gave the largest rate drop in the history of rate drops for the past 20 years. Federal Reserve did. So effectively sticking a band-aid on a bleeding artery. I mean, tell me if this makes sense to you. I'm going to help out an economy that's caused by easy access to credit by granting even more easy access to credit. Anyway, that's my little political commentary. Let's go on to what we need to do to make some money. Alright? So anyway, as always, stocks and options trading is very risky. Always consult your financial advisor before you exert any risk in any options trade. Nothing's guaranteed with your trades. You may lose money, you may make money. Also, check out information on Chicago Board of Options Exchange before you begin trading options, because options carry their own risk factors and rewards. And like always, seek competent financial advice. Alright? I am not a financial advisor, so don't even pretend I'm one. However, I am here to try to help you out as best as I can. Anyway, this is weekly chart again, and let's take an even closer look to what happened in these stocks. Alright, this is daily. Let me go to look 3. Alright, these red dots again are parabolic. If you ever want to know what the parabolic is, just check out the tutorial section inside the Getting Started guide. Anyway, this is significant because the market is doing something very important. It's called a tweezer bottom. You have one candle tail coming out here and the other candle tail going out in the opposite direction. It's a tweezer bottom. Remember, this was the day in which the Federal Reserve said, oh my god, we need to fix something, and release more credit. So anyway, after that, the market went up for a little bit, went down for a little bit, measures some uncertainty. Alright. So if I zoom out a little bit, you can see that this level right here was a major level of support. The market almost broke through, but then it came back. So, luckily for that, because it had broke through this level of support, this next trip on the way down will be here to the 10,000 level, and that would have caused mass panic. Alright, so that's the Dow Jones Industrial Average. Long story short on the Dow, just be careful what you're doing. Still a volatile market, although it still has a bearish trend. Bear that in mind, it still has a bearish trend. So let's look at the Nasdaq composite. The Nasdaq still has a bearish trend. Again, you can see the reversals happening on that day. And the S&P 500, we have a tweezer bottom. Okay, and everything's set up. We almost have another type of reversal pattern here, as the stock can probably trend down. one way to find out, so wait for the market to open. As of right now, I am still bearish on this market, and just going through, see if I can find a few trades for you. Alright. So, long story short, I have no faith in this market whatsoever, as in, to the upside. I've been looking for downside plays. If I do find a few upside ones, I trade them. As of right now, I'm looking down. Okay, 2 trades that I have right now. I'm looking at Autodesk Inc. What I'm looking at for Autodesk, we have this nice, very nice downward trend. Okay, we have a small reversal. We had 1, 2, 3 days at least of reversal trend. Okay, we can start with a minimum of 3 and go all the way up to 8 for a retracement trend. Anything greater than 8 pretty much signifies that the trend has changed. Okay, so what I would do, and write this down, if Autodesk opened at less than that low of the day, remember the pattern, 41.15, then I would get into the stock or buy an option. Remember, if you're going to buy the option, make sure if it's going to be for the next 2-month options, the delta is 0.70. If you go out even further than that, at least 0.50, and if you're going to buy a leap, 0.25. If the stock goes less than 41.15, then I'm going to get in. Again, this is the point in which I'm looking to sell. A large majority of shares will be here, so let me mark that. You never know if the stock is going to get there, though. So let's go on ahead and calculate the break even. Let's see. So low is 41.15. Okay, the bid by ask price, I'm assuming 50 cents. So the stock has to go all the way down. Subtract, make this easier on myself. If I subtract 50 cents, wow, that higher math is killing me right now. 516. Alright, so stock got to actually 40.65. I would sell half my shares to break even on that. Then from there, not sell. In this case, if you're shorting, you would buy them back. If you're buying a put, then you would sell them. And then from there, set another stop here to sell some more shares. Always remember, pigs get slaughtered if you're not paying attention in the market. So that's my play of the week, one of them. The other one I'm taking a look at is ExxonMobil. Again, this is just a simple retracement play. Again, I have 1, 2, 3. I can go up to 8 days. Okay, and ExxonMobil's low for that day was at 83.60. So assuming 50, remember, I'm assuming a 50 cent bid by ask price. It may be higher, may be lower, and depending on your option price, it may change. But long story short, by the time it gets to this point, assuming it ever gets to that point, I should be almost completely out of the trade. And set that level there. And a good sell point for a majority of your shares for break even probably be 83.60, assuming 83.06, assuming a $1 bid by ask price. Okay. Anyway, that's my plays for Monday, January 28th. Other than that, this market is so much volatility right now. It's trades are looking pretty hard to come by. Well, as always, again, I am not your financial advisor. If you want competent financial advice, make sure you go and seek that out. Also, if you plan on trading options on this, make sure you study information from the Chicago Board of Options Exchange. Options carry their own risk and rewards factors, and make sure you have competent management of that. And just don't do anything completely retarded, like, I don't know, put 75% of your whole account on one trade. That's retarded. No more than, just make sure you set up nice stops. A rule of mine, no more than 10% of account involved in one trade, and no more than 50% account working out their total. Okay. So anyway, have a good night, and see you next week.